Hey everybody, this is Jose Blasco here. I believe you should be able to hear my voice. I had a unexpected technical problem as I am launching the session, and this is the reason why I am connecting with 4 minutes of delay. And I am still at the moment trying to catch up with everything connection wise to make sure that everything is working fine. So I would really appreciate if you could have a quick message on the chat box to let me know that you hear my voice and everything is good. That would be really okay. Okay. Okay, everybody. So I think we're gonna get started here. Okay, everybody. Hello, everyone. Jose here with a little bit of delay, as you can see, but better later than never. And again, sometimes technology is a bit challenging and creates a little bit of delay. And this is just something that sometimes happens. Okay, but anyway, we're ready to start now. So, welcome to the session, everybody. Today is 19th of March, 2020. My name is Jose Blasco. I will be your instructor guide, and today we are getting together here in the YouTube channel to look at longer term opportunities in the markets. We will normally be using options. And so on. Even though today we may look at other markets too, because everything has been moving really, really crazy out there. So we may do a little bit of a diverse type of analysis to look at different markets and understand what's going on out there in the world, because the world is indeed crazy as we speak. So we'll be looking at those different scenarios, because obviously crazy, it's certainly crazy, and now if we get serious when it comes to health, is really a bad situation. But when it comes to trading, often craziness equals opportunity, and that's why today I would like to have a little bit of a diverse day, looking at different assets, different time frames, and a little bit of everything. Okay. Before we start, we have a disclaimer as always, so I will read this quickly and we start. Disclaimers. The following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive when using our products. And that's it. That's the disclaimer. And we are now ready to go. Okay. So here is TriStation. Very good. Yeah. Yeah. Very good. Perfect. Okay. So now, normally, what we do is that we start the day and we begin utilizing the scanner, looking for opportunities, directional, non-directional opportunities, all sort of opportunities, and we start planning from there. Okay, that's what we normally do, which makes a lot of sense. Okay, but today we will not approach the markets in this manner. As I said before, my intention today is to kind of look at different type of markets out there, given the market environment that we have in front of us, which is really a unique situation. Okay, if you look at the markets, I mean, some market analysts have defined these market movements to be similar to the ones that took place in 1987. So we need to go back a few decades in time to find price movement of the same type of magnitude and craziness. And therefore, let's call it that we are in front of a historical moment in the marketplaces, and therefore it's going to be more than worth it to go ahead and really explore the markets from different angles. Okay, so today expect me to move from time frame to time frame, looking for very unique opportunities in that sense. Okay, also because the market have moved so much, normally I would be dealing with a daily time frame combined with the 55. Okay, but we're gonna be a little more in the conservative side today, moving to the weekly time frame to analyze our climates, and also moving to the 144-minute time frame when it comes to understanding our on-field orders to buy and on-field orders to sell. Okay, so today we're gonna approach the market from those other angles. Okay, given where we are at. It's taking a little bit of time for the chart to load here, so we'll just be patient. But apart from looking at the S&P, which is going to be my starting point, okay, I also want to, let me move to the daily time frame. I also want to look at the VIX, okay, VIX.X, okay. I want to look at the VIX because certainly the VIX is also doing things that are quite extraordinary. We have VIX levels of 76, okay. This is certainly not a normal thing that happens every day. Okay, this is not the case at all. This is extraordinary, as I said. If we were to go back in time, so I'm going to move to a monthly time frame. We saw these levels on the VIX, all the way in the peak of the craziness in October and November 2018. So that level of implied volatility in the prices of options does create scenarios which are very, very unique opportunities. Okay, even though attached with a very high volatility index, also come very, very fast moving markets, which justify that premium. And therefore, it's not like selling premium, it's free money where you sell options, collect premium, and that's it. It's so overpriced that you're going to make a profit for sure. Well, it's not necessarily the case. Given the fact that we do have volatility in the market, real volatility, real historic volatility in the market, and therefore that implied volatility in the prices of the options it's not a guess or like an expectation, like when prior to earnings a stock has their options grow in value because they're expecting something to happen. In this case here, we are dealing with a situation where something is going on and it's happening right now as we speak. So certainly there is a lot of expectation for movement in the world of options, and it has to do with what is happening as we speak. Okay, so I wanted to start with pointing at the VIX with such a crazy high level of premiums. This is nothing new. It's happening like that for a few days already, right? Going back to the S&P, okay, when looking at the weekly time frame of the S&P, we are in a market that may have entered the territory of moving too far too fast to the downside. We've been going down for 3 weeks in a row, where statistics suggest it should go down by 3 weeks. So 3 out of 3 means that it may keep going lower, but it may be time for this market to go back up, either as a correction to then continue impulsing to the downside, or just as a reversal. That we will never know until it happens. Okay, but certainly from a timing point of view, you can see the climate of these markets is now entering the territory of being a little overstretched to the downside. Okay, which is, maybe we don't need auto climate to say that when you see this move compared to that move. Okay, I think it's pretty clear. But at the same time, auto climate is adding the statistical analysis on top of it, which has us say with an objective manner that this we are late to the party here. Okay, and therefore continue shorting could make a lot of sense for short-term moves. But if you plan to enter a longer-term trade, which is the title for the session today, it may be just a bit too late. Okay, so you may catch moves, but they're gonna be of a very short duration. Okay, and by the way, this is also the case when markets fall. Normally, everything happens quite fast. So don't expect to be short in the market for 2 years. It would be it could be possible, but it would be a bit hopeful given the current climate in the market based on stats. Okay, 3 out of 3, as we said. Okay, so we should see a little bit of a change of direction at some point, and it should be sooner than later based on stats. Okay, now, craziness happening in the world may totally invalidate the stats, but we don't want to have a guess. We want to have a decision based on data, not based on guesses. Okay, so this is what we have when it comes to the S&P. Okay, so we're gonna come back later looking for stock opportunities. Okay, stocks that are in certain positions where we may be able to find good setups to trade to the short side. Now, in parallel, I also want to look at other markets. Okay, so for example, the Euro US dollar. Okay, so when we look at the Euro US dollar, you can see this market has been falling very, very hard as well, very, very hard. But this is a different story. Okay, with the Euro US dollar, we have a different story here, because when looking at the climate, Okay, I lost my climate here. Okay, yeah. So when looking at the climate, you can see how the climate is still blue, and we do have the gray line right below the blue dot. Okay, and that means that when the week is over and the next week begins, we switch from an up climate to now being in a down climate. So we're gonna have the first red dot, and if that's the case, okay, statistics suggest that the euro would continue falling down by another 8 weeks. In other words, we should be looking at the euro not for this week, okay, because basically tomorrow is Friday, so the week is almost over. But thinking of next week, we may start planning trades to short the euro to hold trades of multiple week duration to the downside with the euro. Okay, so certainly this is something that we could explore. Apart from the euro, there is another key currency I would like to bring into the screen, which is the Great British Pound US dollar, which has been hurt very, very, very intensively with levels of volatility which are again incredible. And this currency is already in a down climate. Okay, 1 out of 6. So same as the euro, but you could see that this currency is a bit weaker than the euro. You can see it based on how it felt. You can see that the size of the moves when it's going down, starting from the last UFO, there is a lot of weakness built in the pound. And the thing is that this has just started based on the climate reading that we have here. And the moment we have some sort of a retracement around the 126 area, which by the way, next Monday is going to be much lower than that, maybe 124, something like that, which is that UFO right there. So we may have a very, very powerful entries for shorting opportunities to ride the pound down very, very intensively. Okay. So those are markets that I want to check. Another market I would like to check for you is crude oil. Okay, at CL. I would like to look at crude oil because, again, if we look at crude oil and we look at it from a statistical point of view, so this market went already 10 weeks down when statistics suggest 7. Okay, so certainly here we are late to the party to continue shorting. Can it go lower? Yes, of course, anything could happen. But what about statistics? Well, statistics suggest it's not going to be the case. So we may have, not for the next week, but maybe soon, maybe the week after or something, we may have a change of climate, okay? And we may have then the following dot or the dot after that starts showing blue. And crude oil, having dropped so much and so fast, may have a very powerful recovery for a trade of a few days, maybe a couple of weeks. I'm not saying crude oil is going to go back to normal prices. Okay, I mean, if you look at the monthly time frame of crude oil futures, in this case, normal prices are around 200. Current price is 24. That's 10 times less. Okay, so if crude oil was to go from 20 something to 30 or 40, that would be good enough. Okay, maybe reaching 40, it would be an amazing run up. Which I would say probably it's too much to ask for, because when you look at the daily time frame, even here starting at 47, and even here, okay, all the way down here, 27 and 31, huge amount of sell on field orders. So if we were to have a change of climate, it may go back up a little bit just to hit this pile of orders, okay, and start reacting to it very, very heavily, okay, especially because next week this 42 figure is going to be down. And I'm not sure how low it's going to be, but if it was to line up with this UFO, ending at 36.73, so that would make this area with on-field orders to be really powerful because of the on-field orders direct force combined with the EMA indirect force, the two forces together. That's powerful stuff. So the only thing is that I would not expect this to go too far down, given the fact that we've been moving already 10 weeks out of 7, I should say, going down. So I would not expect this market to continue falling down like the world is ending. But certainly have a nice push down, it's possible, and then begin the process of reversing, changing the climate from red to blue. And then, as you saw here, for example, let me bring the drawing here. So then you could have 1, 2, 3, 4, 5. Statistics suggest 4 to 5, right? So 5 days, okay? 5 weeks, I should say, because this is a weekly time frame. Okay, so 5 weeks moving in that particular direction, which are again 5 weeks going up. Like I don't know how much was that, but 46 to 66. That's 20 points on crude oil. That's impressive. Again, I said that I don't think that's going to happen because of all those UFOs. But if instead of 20 points, you can ride 10, 15, still a good trade. Okay, still a pretty good trade, especially if you catch this trade using a lower time frame, such as the the 144 minute chart, for example. Okay, so again, opportunities in many markets out there. There is one which I haven't checked yet, which is gold. Okay, so here's gold. So when looking at gold, we were coming from an up market. We had a little bit of a pause, okay, and now it's going to be clearly defined next week into a down climate. So again, it's going to be climate candle number two, week number two, into a climate which should be 6 weeks. So again, we could find opportunities here, potentially at least. We could find opportunities to catch moves and ride moves for another 4 weeks. Okay, 2 out of 6 leaves us with additional 4 weeks. And obviously, all of those are opportunities for a longer term move, which is why today, instead of using the scanner, I am focusing on these very specific markets, given where we are at with things in the world. Okay. Good. So let me see. Okay. So you guys, if there is any question out there that you would like to ask me, or there is anything, any additional market you would like me to check, which I haven't discussed, feel free to let me know. Type it on the chat box, and I'll be taking a look at it, and we'll plan those trades. Okay. Good. So let's begin. Okay. So first, I want to go back. I want to start with the currencies today. Okay. So I'm going to start with the euro. Okay. I'm going to start with the euro. Euro crashing down, currently 107.40 something. Really powerful move. Okay. We can also look at the dollar index, the DXY. Okay. So when looking at the DXY as well, to have a clearer understanding of what's happening with the currencies out there in the world. Okay. Well, you can see a new climate that just started with the DXY, climate going up. And when that climate begins, which it just started, okay, statistics suggest it's going to be 7 weeks. So in other words, we still got 6 weeks to go for the US dollar to expand, to propagate like it's done many times before based on stats. Okay. And you can see it's a very powerful move. We got many UFOs. Okay. 98.75 is the current value for the EMA. When this week is over, tomorrow, Friday, and we reopen next Monday, 98.75 is going to be 99 something. And that means that you're going to have multiple piles of on-field orders, direct force located right here, right? And all those piles of orders are going to be lining up with the EMA. So you have the direct force and the indirect force. So again, it's looking good. It's looking strong for the dollar index to move up against a collection of currencies, which also kind of confirms that the euro should keep falling down. Because if the US dollar is about to strengthen, or looking like it would strengthen against a basket of currencies, so then it makes sense that the euro and the pound, as I showed you before, they are probably going to weaken even more against the US dollar. Okay. Sorry for that. Okay, so give me 1 second, guys, if you don't mind. Just 1 second. Okay, so I am back. Sorry for that. I just felt my throat was going to be really, really itchy, and I wanted to make sure it was not going to be the case before we continue. Okay, so we have the euro. Okay, so we have the euro, and as I said, it is looking like certainly we have an opportunity to continue exploiting the move to the downside, especially given the fact that next week we're going to have a confirmed climate red color. What right now it still looks blue, but potentially the euro could keep going down for another 8 weeks. Remember, we always round up, so 737 becomes 8. So again, very powerful stuff here, and therefore what we want to do is to look at 109.98 as our reference point. That's 110, right? that's 110. And when the market opens on Monday, this value, this EMA, is for sure going to be lower than that. Okay, um, unless the euro just turns around and goes to the sky. Okay, so in other words, we are looking for UFOs somewhere below this price. Okay, and unfortunately, we don't find them. Okay, unfortunately, we don't find any of them here. And in that sense, it's problematic because even though we have a good climate, a good environment for us to short the euro, we are not finding a good UFO to take advantage of this trade. Okay, so I may need to find alternative currencies, okay, for that, and therefore I will look at the pound. The other thing we could do as well, okay, which I'm gonna go back later and do it, is to look at the monthly time frame combined with the 377. Okay, so let me bring the longer term time frames that we use. Okay, give me a second here. One sec. Okay, so you should be able to see the time frames. Okay, and remember, so with the weekly goes the 144, with the monthly goes the 377. Okay, so if you don't find the UFOs where you want with the 144, you can always move to the monthly and use the 377. So we'll do that later on. Okay, but now to not to confuse anyone, I'll continue working on the weekly and the 144 in this setup. The only thing is that I switch to the pound, okay, instead of the euro. So pound, as we said before, very quickly, down climate, 1 out of 6. Okay, so we still got 5 weeks to go. EMA currently located at 126.27, which is somewhere in the middle of this, isn't it? And therefore, when the week ends with the pound solo, so we're gonna have an update of the EMA somewhere in here. Okay, somewhere in here. So I am not fully sure where the opening is going to be. Okay, I'm not fully sure where the opening is going to be, but in my mind, probably this UFO or this UFO should be a valid entry point. Okay, so I'm gonna have to leave it open there because, of course, I cannot predict the future. So we'll have to come back next week and see which is the UFO that is lining up with the EMA, one of those two. Okay, but what I could do though is I could plan the remaining portion of the trade when it comes to targets and so on, and be ready for this. Okay, because again, what we have on the screen is really not a joke. So if I turn on auto UFOs for the pound in a weekly time frame, okay, we got nothing green below price. Okay, so for me to find something green below, I need to go. Let's go back 30 years in time. Okay, so if I go back 30 years in time, and market data should be downloading right now. Okay, so let's wait. Oh, you know what? I forgot to disable auto climate to alleviate the processing power as well. So we're gonna have to wait just a little bit because it's a lot of data that is being processed at this moment in time. We're talking about 30 years of data. So that's plenty. Here we go, we have it. We almost had it. So I guess here we go, we have it now. So let me disable auto climate so we don't forget. Okay, so now if I go back in time, that's 30 years of data, and notice that still no trace of green UFOs, right? So I'm gonna load 50 years of data. Okay, 50 years of data, and that's when for the first time we find a green UFO right there, located at 108.95. Okay, so now is this right or wrong? Are we making a mistake here? Okay, so let me do it this way. Okay, you can see how this is what we have. There is nothing to stop price from the current price to there, and we had to go back in time like 45 years. Basically, we are looking at levels, okay, at levels from 1985. Okay, and you would even think about the reliability of those UFOs to be much less powerful compared to the reality of younger UFOs, and of course, you would make sense if you were to think this way. But certainly, these levels will produce or are likely to produce at least some sort of a reaction. What about, out of curiosity, what happens if I turn on the stats? Okay, so instead of false, I'll make it true. So stats, yeah, and it's 37.95. Okay, so yeah, so as I said, very old UFOs have lesser probability to work the way UFOs are supposed to work, because we are dealing with levels from 1985 in this case, right? So very old UFOs, but still, again, at least a little bit of a bounce or something is to be expected. So probably this UFO is a good place where to take profits. Okay, and I'm gonna make a note of it, which is 108, and I said 108.85. Okay, so this is with the Great British Pound US dollar. Okay, so in other words, let me go back to normal here. Okay, let me go back to normal. Okay, so I'm just gonna go back to the normal weekly time frame. I will re-enable auto climate, so we have the same setting I normally have, so you recognize my screen easily. Okay, and basically what we're saying is that the pound is currently trading at 116. It may drop to 108 something, so that's another 800 pips. Okay, another 800 pips. So you just need to wait for the week to be over, the next week to start, to see where this EMA is gonna fall. Okay, and once that's the case, okay, if instead of 126 it becomes 122, then use this UFO. If instead of 122 is 124, then use that UFO, and you'll be able to execute a trade. Having a target. Okay, the final target would be located. Okay, I just hit the wrong keyboard combination. Sorry for that. Okay, so you would have a final target located at 1.0885, which is the green UFO I found on the other screen. Okay, so this would be the location for the final target. And again, unfortunately, I cannot plan the entry for you because I would be depending on this to be done on Monday. And since we're not going to see each other until next Thursday, I wanted to at least lay out the plan so you can take a look right as the week begins for you guys out there, long-term traders. Okay, long-term traders. Okay, and by the way, they just announced a few hours ago that England, the Bank of England, is reducing the interest rates, and in this sense, being short the pound is going to be less costly from a point of view of swaps. Okay, so you do have a fundamental scenario that certainly helps for this trade to work out in the favor. Okay. Andrew, yeah, I hear you, my friend. Kind of scary in a way, absolutely. And being located in the UK, I get you, my friend. It's absolutely nuts, especially when you look at charts like the pound. Same happens with the euro, to be honest. But you look at charts with the pound where there was a time where it was like 2 point something. And you think about this becoming like 1.8, 1.9, or even now 1.16, and it's really, really, really scary. Okay, the values went way below the scare of the Brexit in 2016, way below that, and on top of that, while doing so, producing a collection of UFOs on the way, which is no joke, which is probably going to make the move to continue moving down. Okay, so yeah, that's what we have. And again, these are very important times in life for all of us, no matter where you live in the world and what are your attachments in life. It's very, very important to think in a way that is completely detached from what you would want it to be, and instead trade what it is instead of what you would want it to be. Because I believe that even though probably as a trader you enjoy shorting, none of us would want for the UK to have a pound at 116, or none of us would want for the US to have an equity markets that have dropped 30 over percent in a matter of, like, let's call it a month. So all of this implies millions of people in trouble, and apart from the health problem already, if the economy is also problematic. So certainly none of us want that. But at the same time, when trading, you cannot trade based on what you want it to be, which is, okay, now I want the pound to bounce back and go back to 2.0, right? Well, that's great, but that's just a wish, which does not reflect the climate and the statistics that we see on the left. They suggest the complete opposite. So again, you could be wrong and things could change in an instant in the marketplace, and that's why we always use stops. But the secret sauce in trading, if you wish, is to always remain with your emotions under control and have a plan that produces an edge for you. So when you execute, you have a statistical advantage instead of hopes and wishes and no protections, because then it's very, very problematic. Okay, so I mean, not that you don't know that already, Andrew, but really it's an important message for all of us to be reminded of those key principles in trading, especially in moments where everything is the way it is. Okay, just to share, and I believe I shared that in a prior session, so maybe you guys already heard that before, but when I started trading myself, it was 2008. My first trade in the market ever was May 18, 2008. And I can tell you things were very, very spicy at the time. Markets were moving like crazy. The pound yen, okay, we can take a look at that, for example. So the pound yen, GBP, JPY, okay, so let me go ahead and take a look at the ATR, the average true range of the pound yen. Okay, so enable studies, average true range. Okay, so this currency right now, as we speak, is moving. Okay, it's moving at a rate of. Okay, I'm not sure why I cannot adjust this the way I would like it to be. Okay, now, so this currency is moving at a rate of 307 pips per day. Okay, because I'm looking at a daily time from now. So 307 pips per day, it's pretty nice. But let me tell you that at that time, the pound yen, okay, at that time, and for many, many, many months, and that's how the pound yen became known as the beast. So that was a currency that used to move easy 450 pips a day. Okay, so you could say the pound yen is a bit slow at this moment in time. Okay, even though it's moving 300 pips a day, you could say it's a bit slow compared to 2008. So I mean, I've seen fast movements in the market when I started trading. I just give you an example with the pound yen. But when it comes to the equity markets, okay, I remember a few weeks ago, I was looking at the markets and planning some trades, and I was sharing with my wife, "Wow, we are back to 208, okay, 2008." And somehow, even though, as I said, for economies and people, it's not a good thing. From a trading point of view, to be honest, I had a little bit of a smile on my face because it got me back to my starting times, and it was great memories to see such a speed of market movement, which you don't see often since after 2008. And for a few days I had that smile on my face because of the volatility was very similar. But then there have been days, okay, like for example a few days ago, where the market, even before the market opened, it was down by 11% in pre-market session. Okay, I don't remember the day, but it was just just last week or beginning of this week, okay, something like that. I mean, I just kind of lost track because it's been crazy every day. But there was these few days where now the speed of movement in the equity markets were like, like a third more than what I've seen as the fastest speed in the world. And when these things happen, we get paralyzed, or we tend to get paralyzed. Okay, I mean, I've been trading for 11 years. It's not like I have been trading for 50 years. It's not the case. But I would say that I've seen a lot in 11 years. And, you could see how unconsciously some wishes or hopes were building up in my mindset, even though I know I'm not going to let these to influence my trading, but you could see how it's building up, right? And next thing you know, you start thinking of people. Oh my God, this market is crazy. Oh my God, the virus. And next thing you know, when you are putting a trade in place, it's so easy, even with experience, that next thing you know, you are biased toward trading in certain direction, or maybe find an excuse to break a rule that normally you don't break, but today you have the perfect excuse to do it. Okay, so again, if you live in the UK, for example, well, the pound is probably one of those cases where you may want to find excuses to buy the pound because it's been falling so hard that you may convince yourself it's no way it's going to keep falling. And again, we don't want to do this in trading. Could be the pound, could be crude oil. If you work in the oil industry, has been back down to levels of 2003, 2004, I believe. Equity markets, same story. So we want to make sure we remain objective. Okay, guys? 1 second, please. Sorry for that. Again, I deviated from the charts and added a little bit of market insight or mindset insight, I should say, because it's really critical in these times. Okay. Okay. So before I move to other markets, okay. I'm really sorry, guys. So before I move to other markets, I would like to go ahead and switch time frames, both for the pound and the euro, to 377-minute time frame for the edge time frame, and a monthly for the common time frame. Okay. So what do we see with the pound if we look at the monthly time frame? Okay. Well, we see a picture which certainly points at the very same thing I said before, which is climate is confirmed to be red. This is candle number one. And if this goes down, statistically speaking, it could last up to 6 months. Sometimes the climate here has been 4 when it was supposed to be 6 when it's blue. So this one was 1, 2, 3, 4, 5, 6, 7 when it was supposed to be 6. So you never know. Here in this case, it was 2 months only instead of 7 months, and here again it was more than 6. So, but anyway, forget about what happened. Let's focus on the statistics. We are candle number one out of what potentially could be 6 months going down for the pound. If we were to look at the euro, okay, if we were to look at the euro, okay, so the euro has already been down in a down climate for a while. And when you look at the current situation is 2 candles into a climate which should be 6 months. So again, the climate for the euro in the monthly time frame is already developed to a higher degree compared to the pound. But in both cases, it seems that there is room for this to keep falling for another at least 4 months, isn't it? If I look at the dollar index, the DXY, so I'm kind of rewinding what I did before with the weekly time frame, but now I'm looking at the monthly, right? So what do we have? Well, what we have is, again, blue color is not confirmed. So we'll see next month, okay, which is 10 days from now, if the dot is thin or thick, okay? But certainly price move way far above the average. So that's very, very likely going to give us a thick dot next month in 10 days from now. And if that's the case, we are month number one into what could be a 6 months climate. Okay, so it doesn't matter if you look at the DXY or you look at the euro or you look at the pound. I mean, we know those are inversely correlated markets, so it's not a surprise that the pound and the euro are red and the DXY is blue. That's not a surprise. But also, it's powerful to see that they confirm the same thing also from a statistical point of view, where we are dealing with anywhere between 4 to 6 months of continue moving higher. So this is what should be happening based on pure stats and data, market data. Okay, putting on the side fundamentals and certainly the craziness that is happening worldwide with the COVID-19 virus. So okay, so let's go back to the euro and see if we can plan a trade on the euro to take advantage of those market opportunities. Okay, and I would say we can. Okay, I would say we should be able to do so. So the current level for the EMA is 110.36. Okay, now 110.36 is all the way here on the top because the top here is 45. Okay, and the current level of the euro is 07. So if it goes back up and gets to where the EMA is, well, the EMA is going to bend and go back up. Okay, and therefore instead of 110, it's going to be 111 or something like that, which is somewhere here, and there is no UFO. So in this sense, as of now, we don't have a shorting opportunity for the euro in none of the time frames, the weekly or the monthly, for a longer term trade. Okay, for short term purposes, you will find many opportunities, but today is a longer term day. Okay, so I'm not talking about that today. Okay, so keep that in mind. But again, next week for the euro, okay, which is 2 days from now, you can recheck. And I would say that probably using the weekly time frame, you will have an opportunity in front of you. And next month, which is 10 days from now, you can look at the monthly time frame and you may have an opportunity. I would say very, very likely an opportunity with those red UFOs on the screen. Okay. Now, what about the pound? Okay, what about the pound? So with the pound, we have a similar situation too. We have a very nicely defined climate. The current value for the EMA is 126. Okay, we have a UFO here which is ending at 2342. So again, we need to see the update after 10 days to see where the EMA is, and from there take the trade. Okay, but again, this is likely going to update around, let's say, maybe 123, 122 something. So we may have this confluence. So both with the euro and the pound, okay, and certainly the pound was looking like the highest opportunity, the most, I should say, the most likely opportunity in the weekly time frame. Okay, so we are looking at a potential opportunity, but you will need to come back on Monday and reconfirm if that's the case, keeping in mind the target that we set at 108.85. Okay, so keep that in mind. For you guys out there curious when it comes to what targets could be in the monthly time frame for the pound and the euro, so let me turn on AutoUFOs. Okay, so going back 50 years in time. So what do we have? Going back in time 50 years. In the monthly time frame, really, there is nothing. Okay, so the pound actually, for such a long-term trade, we may go under 106, which is all-time low for the pound. Again, there was a UFO on the weekly time frame. We saw it before. Okay, but let's take a look at stats. Okay, in the monthly, how is it gonna be? Okay, with the weekly, you saw what happened, isn't it? So what about the monthly? 55% is better than the weekly. Okay, but we don't have much there. Okay, so we don't have anything green as of yet. Okay, so what about the euro? With the euro, we got 64%, which is more powerful, and we got room here to keep falling until 102.06. Okay, 102.06, which that is 500 pips. Okay, 500 pips. So if the euro falls 500 pips, and the pound has been showing weakness, let's take a look at the euro GBP. So euro pound. Okay. So the euro pound in the last month, you can see it went up. Okay, it went from here to here. So if it went up, it means the euro got stronger and the pound got weaker, which we indirectly saw that on the charts, isn't it? So in other words, if we look at the euro and we look at the target for the euro on the monthly time frame, which is 102, which is 500 pips away from the current price. So if you were to look at the pound and GBPUSD, and we think about what we said before, right? Which was final target 108.85. Okay, so from 116 to 108, we are talking about 800 pips. Okay, so with the pound is further away, but because it's weaker, while the euro travels 500, then the pound could certainly travel 800. Okay, because we saw that weakness on the euro pound chart. So long story short, unless there is a change of climate, which could happen, by the way, especially now where fundamentally speaking, there is a lot of uncertainty, and the moment things clarify, it will lead to many changes of all sorts. So we may get to see something like it happen, or we may get to see the complete opposite happen, because next thing you know, a new climate begins developing because now they found a vaccine for the COVID-19 or something like that, or maybe the UK does something very dramatic with their currencies and launch the crypto pound or something like that to offset the problem. You never know what's going to happen. Okay, the world can be very, very crazy. But in the meantime, as I said a few times in these sessions already, we are just gonna trade what we see instead of what we want or what we think or what we guess is gonna be. Okay, let's focus on what it is. Andrew, great tool to climate. Thank you very much. Alan, Jose, I know this is a trading day. What the best way to get tech support from you guys for some ongoing issues I'm stuck on, please? Okay, so it's been a very complicated week for us this week. So, Alan, if you have sent an email and we haven't responded, I would like to ask you to forward it and send it again one more time. And you could go ahead and use. Let me type it on the screen. Reach at tradewithufos.com. Okay, and again, a collection of things have been happening on our end, all logistics, but certainly a collection of things happen on our end. An update on AutoClimate got stuck in the TradeStation App Store. We had a problem on our own website. So, a collection of logistical bumps on the road, happen, and we are delayed on answering emails. Okay, so you can use reach at tradewithufos.com, and if you want, you can copy me as well, jb at predictive.com, and we'll get back to you as soon as possible, Alan. And when I see you, I will certainly do that. Okay. Yeah, and if you have any question, yeah, you can just type it on the chat box, and if I do understand it fits today's session, I'll be more than happy to answer. Okay. Sorry, guys. Okay, so let's continue. Equities. So let's take a look at equities and let's see where we're at. We started with the currencies. I would like to look at the equities. Okay, so with the equities, if you look at the monthly, okay, if you look at the monthly time frame, we are candle number 3 into what should be 3. Sorry, this is weekly. Sorry for that. Weekly time frame. Okay, so we are reaching, okay, the end of the life of this move to the downside on the weekly time frame. If we were to look at the monthly time frame on the S&P, okay, that's the scary picture, because here is candle number 1 out of what should be 6 months going down if the market begins going down. Okay, so what's it gonna happen? Well, one of the two. It's either the weekly time frame will turn around and drag with it the monthly climate, or the weekly movement going up is just going to be a correction, a little slowdown in the process of this 6 months climate to continue propagating to the downside on the S&P 500 index. So again, it's really difficult to say, very difficult to see, and that's why we have conducted lessons where when you are exposed to equities, the best way to do it really is to construct a portfolio where you have positive delta positions, negative delta positions, lots of positive gamma, and lots of control over time decay and volatility, so you can navigate these situations where you always have some positions creating some losses, some positions creating some winnings, and then basically you have a hedged portfolio that performs no matter what happens. That's the way to be exposed to equities. Okay, you can certainly also go ahead and expose yourself by using SPY and do one trade and that's it. You can also do that, but for the longer term duration trades, which is what I'm looking at now by looking at the monthly time frame. So the problem of that is that then for you to be stopped out, it may take 2 weeks and a half, and then it was 2 weeks and a half of wasted time for you to be stopped out in the end. So I personally prefer to be a bit more dynamic with the portfolio, but for you out there, if you prefer to be a bit more passive with your portfolios and you are okay with waiting a few weeks to be stopped out, without having anything else working for you in the account, okay? Because in the end, it's, if you keep doing it, even if you get stopped out a few trades in a row, and let's say for the next 3 months it's all losses what you get for the long-term investors, but then you pick up the proper direction and it's longer term, so it takes a long time, and those longer term trends tend to last for a long time, right? So then after 3 months of losses, you may get like a year and a half of winning months non-stop. So again, even like that, you could end up profitable, but at least in my mind, or given my personality, going through a collection of 3 months where you could be underwater, it's something I have a little bit of a difficulty with it, given my perfectionist personality. Okay, so it's a valid way on how to trade. It just doesn't match my personality, so I prefer to run a diversified portfolio with multiple equities in it. Okay, but for the ones of you that want to be exposed to SPY itself, okay, so again, the opportunity, as you can see, is there, because in a monthly time frame, we are looking at a climate that is just in the early stages. So if this was to develop, 290 is your reference point. This value will update 10 days from now. So the moment this value updates is going to be lower, and lower means it's very, very likely going to point at this UFO, which is 281, 274. Okay. Now, having said that, okay, take a look at this. Okay, I said it many times when I talk about stocks. I always say it. I always say stocks are fragile. Stocks are fragile. I always say it. In this case, it's not a stock; it's an ETF. Okay, and notice the very, very disappointing value that we have here. Okay, so if this was to be a stock, I would say that such a low value for probabilities suggests that there is no institutional interest. Well, there's no way there is no institutional interest on the S&P. Okay, so how come this value is so low? Well, the reason why this value is so low is because the real market, if you want to chart the equity markets, the real markets that you want to chart is the at ES. That's, let me type this again. That's the real market that you want to chart. The at ES, which is the futures continuous contract, because that will be a market that trades 24 hours a day. And we are about to see, I haven't seen it, but I'm pretty positive that we are about to see performance stats, which are going to be much better compared to 38% that we saw a minute ago. Okay, so I'm just loading the chart. You can see here on the upper left, pending data. Okay, so we are just going to wait until this is loaded, and then we'll go for it. Okay, so just 1 second. Okay. Yeah, Alan, and I do not mind at all if you want to phrase your question on the chat box. Okay, really, I'd be happy to take a look at your question. Okay, so it's taking a little bit of time there. Okay, now we got it. So you can see here we got a much better performance stat. Okay, much better performance stat, and we got, now you can see the value of the EMA, which is 2897. Okay, 2897, which is a little above this guy. Okay, a little above this guy. Okay, now what happens if the market was to push to the upside very strongly? Okay, and by the way, don't be surprised if it happens. Okay, because everybody knows the markets crash down. Everybody knows that. Okay, and I mean the chart shows it going up. Okay, crash down. No need to explain. I think it's a perfect picture. Okay, but at the same time, when you see these movements to the upside, this is extremely intense, and many times it happens in no time, actually faster than the movement to the downsides at times. Okay, so don't be surprised if the market was to reach that UFO before 10 days, because we are dealing here on the left. I want to point out this is the monthly time frame. So we got 10 days to go for the next month. You could reach that UFO. You could reach that UFO in less than 10 days. I would say it's not super likely, but it could happen. We've seen things like that. So if this market was to go up from 2383 all the way to 2900, okay, we are talking about so many points. It's just ridiculous how far price is from that at the moment in time. So what's going to happen to that EMA? That EMA is going to bend and go back up for sure. And instead of 2900, it's going to be 29 something. So it's going to fall somewhere in the middle of that UFO or that UFO or that UFO. So again, if the market goes back up very, very fast, this area with unfilled orders is really likely going to bring it down, especially given the current climate that just started. Okay. On the other hand, okay, if we now wait 10 days and it doesn't go that high, and we have an update on the EMA and it's going to be down, okay, so now this UFO is probably going to be the one that is going to make your trade to work well. So how would I take the trade if you want to use the SPY, which again, it looks very similar, but the performance is so weak, right? So instead of looking at that UFO or that UFO where you cannot rely on it, given the fact that these values only give you 38%, right? You cannot rely on it. So what can you do? Well, what I would do is to link my order placement to the futures contract. So I would do something like that. Okay, I'm just gonna keep it simple here. So let's say you wanted to build a bear put spread, okay, on the SPY ETF. Okay, and I know we are hitting the time to conclude the session. I'm just gonna continue 5 more minutes, guys, because we started with 5 minutes of delay. Okay, so I'll take care of that. No worries. But so let me show you this. Okay, I think this will be very helpful for many. So I'm loading the SPY option chain, which is being loaded here. Okay, so we have it. Okay, so let's say that you put the trade in place and you decide to use 92 days to expiration, for example. Okay, and let's say the trade that you were going to do is to buy the 250 and sell the 230. Okay, let's say that was the trade. So buy a vertical where you're going to be using the 250 and sell the 230. Okay, so let's say that was going to be the case. Okay, let's pretend this is your trade where you are using SPY options, using June expiration, using puts, the 250 for you to buy, and the 230 for you to sell. Okay, let's say that was you. So what would I do here? Well, what I would do is that when placing the order, I would want to attach the order for my options trade to the UFO. So, but not the UFO on the SPY, the UFO on the S&P 500 futures. So take a look. If I click on hold, you can see that UFO is 2766.75. Okay, 2766.75. So what I would do is I would say, okay, I want to buy this option, but with an activation rule, okay, I will want to make sure that this is going to be using ATS. Okay, actually I cannot use ATS. I'm going to have to use, okay, interesting. I'm having a technical problem with TradeStation here. Okay, this is not good. It's really looking like I'm going to have to do a reset of TradeStation. Well, this is not the right timing. Okay, so let's do this. I'm just gonna type it for you. Instead of @es, okay, that was my bad. I should not have used because I created this problem, okay? So we want to type ESM20, okay, which is the current symbol for the S&P 500 futures, isn't it? And what you would do here is that you would click on add, and then you would have symbol, okay? So ESM20, okay, and then you will want it to be greater than or equal to 2766.75. If I'm not mistaken, that was the value. So you basically buy puts on the SPY, but only if the S&P futures is trading at a specific value. And why would you do that? Well, because the performance stats for S&P futures UFO is far superior to the performance stats of the UFOs applied to SPY. So 64% versus 38%. Why is that? Well, reason number one, because the SPY trades only 6.5 hours a day, where the S&P futures is 23 hours per day. And reason number two, because being an ETF, there is time decay. Let me rephrase that. Price decay built in, and therefore many of those UFOs, okay, are being surpassed by a few cents, and then they do work, but only after being surpassed by a few cents, which hurts this value. So what's the best way to approach it? Then use futures where you don't have the price decay component, and just place your options trades on the SPY, if that's your choice, based on the values of the UFOs applied to the S&P 500 futures. And by doing it this way, you now have the best of both worlds because you have the options, but you also have the precision of futures to buy options on ETFs. Okay? Good. So I'm going to take a look at Alan's question, and after this, we will be done. So, Alan, well, the autoclimate is still not staying up, and I'm getting an error with the event logs. I tried to reduce the data. Yes, okay, I know exactly what you're talking about, and this is one of the problems that we're having with TradeStation at this moment in time. I was telling you earlier